May, just after 12 o'clock Eastern Time. And we're back with another session of Chart the Markets. Thank you very much to FEG Token and SmartDeFi.com and our friends at BidFi Exchange for making all of this possible. And also to the people at TradingView, because we're using their charts, and I think I should acknowledge that their charts are awesome, and that's why we're using them. This is an interesting day today. It's kind of coming off a long weekend, and sometimes you'll notice that when you come off those long weekends, there's a little bit of a slingshot that happens, and I think that's what's going on today for whatever reason, whether it's in the crypto market or in the stock market. I think Bitcoin's had a real healthy run. That's what we're looking at right now. And let's be real honest. Since the beginning of, what would that be? April, around April 11th, we picked up a buy signal and haven't looked back since. Like, we just haven't had any reason not to be long, and this is a daily chart. No reason at all. I use this as a potential top. I was trying to get an idea. Was okay, if this was the top of this wave, what may a retracement look like? But I'm certainly not guaranteed that that is it. But if it was, it brings you kind of back. 618.0618 brings you to 88.865 roughly. But at no time did we have any reason to enter the long. And I think I'm going to kind of vent a little bit. Over the course of the weekend, I spent some time kind of taking in a little bit of information, thinking it was going to relax me, listening to a few spaces and a few podcasts and so on and so forth. You know the drill. And this is really the noise, right, that we talk about. We talk about blocking out the noise. Well, that's what this stuff is. But you know what? It was an interesting opportunity to take in some different perspective. And before I knew it, I wanted to throw myself in front of a moving car. Because it's all I'm listening to are people trying to guess, and sometimes very convincingly, on what they think is going to happen next. Whether it have been in the crypto market or in the stock market or the commodity market. It didn't matter. It was all the same. If this and this happens, and I think this and this is going to happen because in the past that and that and that has happened, which is why I think this. Are you kidding me? How does that help you? Like, knowledge is power. I get it. But what kind of knowledge is powerful to you as you're trading? Because you have one job. That's to monetize the chart. Not to imagine where it might go for various different reasons that may or may not be relevant. The only thing that matters is price. Do I believe personally that Bitcoin should be $112,000 or $109 or whatever it is right now? Not really. Certainly not in this kind of a stretch. Doesn't feel healthy to me, but that's just my opinion. It doesn't really matter what I think. So all that matters is what I was told. The chart told me, no, let me change that. The market told me that it was time to buy. So what do? Do I argue with it? I suppose I could, or I could argue with myself, because that's essentially what I would be doing. But the market was telling us something different. And even through our sideways trading, it had other plans. And at no time, again, did it give us a signal that we should exit the long. No matter whether we believe that where price is warranted or not, because it doesn't mean anything. The only thing that matters is where it is. And this is kind of why I emphasize just do what you're told. I believe this is the language of the market. It's a mathematical derivative that is unto itself a language. And I try to just listen to it, interpret it. The market told us that Bitcoin wanted to continue to go higher. And even back here, on this big red candle that probably scared a lot of people, according to the way that we interpret a chart, what do we know about maintaining the T-line? And the divergence between those two levels. It tells us that the trend is still intact. And here we are today. What I want the takeaways to be from these sessions ultimately is that you have tangible, practical, demonstrably proven tools to put in your toolbox. That's ultimately what I hope happens. In that the time that I spent listening to those people, rightly or wrongly, pontificate about where they think the world is going like Nostradamus, I could have spent in front of my charts, listening to the language of the market and monetizing the charts, instead of having this general conversation where 200 people are all a little bit wrong and all a little bit right. Yet none of the information you can take away and apply to your trading today. That's what these sessions are about. The 30,000 foot stuff, let's leave for somebody else, right? We're more interested on how to interpret price on a chart. That, to me, is a gift. All of the other stuff is a curse. Of course, we want you to be smart, intelligent, worldly, all that stuff. Take in good information. Absolutely. That's how we get better. But just be able to differentiate what you can use and what is just a bunch of people navel-gazing, trying to prove who's right and who's wrong. Right? That's not important stuff. And I don't care, how long people have been in it. We hear it all the time. Oh, I've been in banking my entire life. I know how banking works. I believe this is a great stock. I've been in pharmaceuticals my whole life. I think this is a great stock. How about this one? I don't know anything about the steel business. Not a lot anyways, just basic stuff like everybody else, I suppose. But what I do know is that this chart has been one bearish monster for various different reasons that ultimately I don't care about. Because I don't. The only thing I care about is what the chart was telling me. Now, if I was an expert in the steel business and I had the ability to read charts, and I want nothing but the best for my industry, but yet I see this weekly chart back here with a big sell signal on a weekly with all my indicators looking like it wants to roll. What do I do? What do I do? I'm torn now. Do I let my industry experience make this decision? Or do I let the chart reading ability make that decision? The chart wins every time. Because it doesn't have a narrative. The chart wins every time. There's a monthly of the same stock. I don't want to know what went on up here to make it roll over because I really don't care. I don't care. I don't care why it went flat. I don't care why it failed at the upper value range. Other than the fact that the upper value range gave me targets. You think it's going to hold the lower value range? I doubt it. Do I care why? Not really. I don't care. Neither should you, if you're a trader. If you're an investor, well, yeah, you might be something else going on behind the scene that you might want to know about. Maybe or maybe not. I don't know. I just read price on a chart. Monthly chart says to short, then you go short. Monthly chart says to long, then you go long. This could be Sesame Street Incorporated. I don't know. I would interpret it the same way. Because that's the other thing you're going to hear in the spaces that you hang out in. I have been in this business. My father was in this business. My grandfather was in this business. And I know this business better than most people could ever hope. Yeah, maybe. Probably do know how to operate whatever that business is. But you don't know how to read the price on a chart. And unfortunately, that's what matters. So if you're the CEO of a publicly traded company, note to self. This is the attachment to your resume the next time you're looking for work. This stock chart. Because at the end of the day, do you want to hire someone just that drives companies into the ground? Probably not. So yeah, it matters from that perspective. But from yours, you just have to monetize what the chart tells you to do. And I'm showing you this one because this is really a home run, right? If you're short, if you had puts, and being everything is fractal, it doesn't matter. This could be a weekly, it could be a 15-minute, it could be a 5-minute. But hey, I have an opportunity to start connecting 2 points, and we talk about this all the time. I'm going to do it. Will it mean anything today? I don't know. Maybe someday, though. But right now, we have a problem. And there's a lot of really smart people in this business that probably didn't anticipate what's happening. They had a better outcome in their minds. For good reasons, probably, right? But the chart tells us something different. This is a daily decline that you're looking at. Each and every time you hit one of these bottoms, it's like, oh, that was the bottom. This is a double bottom, it's going to take off. Nope. 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 How do we make more sense of that? Stretch out your time frames to weeklies, and in some cases, if you have enough relevant price history, a monthly. It doesn't matter what the asset is or what the time frame is or what the market is. It doesn't matter. The market will tell us what's happening. Very clearly, this has been in a downtrend. Look where we're trading. Below those levels that we speak about all the time. This is a long-term chart, but this is the upper value range. Where did you find resistance? Up here. Where are you finding support? Along the lower levels. As long as this divergence between these two stay intact, I think it's safe to anticipate you're probably going to find this lower level again at 5 and change. 523. Will it hold? I don't know. We don't know. But right now, what we do know, when you're up here, This is the previous wave's low. Let me blow this up. But we know that when with these failed attempts, price will likely come back and take out the previous wave's low. And that's what it's done. How do we have a verification that that's taking place in real time? This. This is telling you that this is unwinding. It's not telling you the reason why it's unwinding, but it's telling you it's unwinding. Like, let me ask you something. When you're in this trade, if you bought puts or you're short in some other form, and price is falling like this, are you concerned about the why all of a sudden? No. You're not even thinking about it. Because all you're thinking about is, how low could this thing go? That's all you're thinking about. And you should be wisely looking for areas to exit or take profit or whatever the case may be. That becomes the job next. But the chart's telling you. So yeah, I respect people's experience, but I respect my chart and the market more. My own father, who I respected more than life itself. Did we agree on things that we would talk about in business, finance, and the economy? Not all the time. But my charts won 9 times out of 10. Not me, but the market. I was just interpreting what it was telling me. That's it. This is going to be as simple or as complicated as we want to make it. That's why it's important that these sessions be about how to interpret the chart first and what the 10-year may do if the Chinese do that and the Japanese do this. We'll pick all that stuff up, don't worry. Because what we do is a real-time representation of what money is doing, not what people are saying. That's what we're trying to do, or should be doing, or are doing. I'm not interested in what people say. I'm only interested in what the money's doing. And as an example, we just read charts, right? That's what we do. So let's, as an example, use, this is a weekly chart of USD JPY. United States dollar, Japanese yen. So all that's on this chart is our long short indicator, the volume profile over here, trend line, and a level line, right? That's it. We had an opportunity on the weekly, like we talk about it all the time, to connect these two tops. So we do that. It's one of the first things I'll do, and I'll do it on the way up as well. But, now I've got a level of respectability as we come back to retrace it. That'll be a story for another day. What I know is that on this weekly chart, and I'm using the weeklies because in times like this where you're experiencing so much volatility, it's hard to filter out the noise. The weekly chart does that a little bit better, right? Filters out the noise and helps you with the overall trend. So here we are. We've just made a lower high connecting the tops, and we get a sell signal. Again, that divergence that we talk about all the time between the T line and the 5 EMA, and everything's fractal, so it doesn't matter of the time frame, is completely diverged. So we're still short. And even through these retracements higher. And this is why we are careful to read charts. Because if a lot of people will look at this chart here and be thinking that, you know what, this is a nice bottom, kind of through a bit of a structural level in here. Yeah, it's a nice entry area. Or at least that's what it appears to the naked eye. There, everyone else is looking at this going down, up. Well, when in the world did that happen? Where everything just goes straight up or down? Because it doesn't. There's an ebb and flow, an inhale and an exhale. Just like this is like its own environment, living, breathing thing. And to the naked eye, you see 3 green candles and people get excited, especially on a weekly chart. Oh, we're about to run again. But no, that's not really what's happening. Because using our methodology, we're looking at these candles and all of a sudden they're failing a critical level of measurement for us. And to validate that, we have this divergence that even rolls over. Even on a current candle, you can see that happening. So, is it a bounce? No, it's not. In fact, it did what we do in here all the time. Move up, fail, take out the previous wave's low. And the downtrend continues. I know that everybody watching this right now or listening to us right now can do this. I really do believe it. Like, this is a very easy way to kind of go through that ebb and flow. This trend is still intact to the downside. This weekly candle, if it was to, it's only Tuesday, but if this weekly candle was to close here, how would you interpret that? I would interpret that as a bit of a failure. At least this candle. We don't know what the next one holds, but at least this one is. It's certainly not a confirmation that we go higher. And when we get there, we'll see it, right? It'll show up. But what we're looking for is, validation that our trend is changing. That's really what we're looking for. And until we get it, we just stay in the trade we're in. This is just like Bitcoin to the upside. Here we just have a move to the downside, using the very same metrics, and all relevant to your trading today. You can switch screens and go to your charts and actually start to use this in action. And it doesn't matter the time frame. It can be any time frame that you want to use. Right? Our biggest job is listening to the market, because it's always talking to us. But are we ignoring it or listening to it to its fullest? I don't know. But you had no idea what was coming after this entry signal back here on the bottom left. But even if you felt you were late and you got in anywhere up here, boy, even at this top, if you got in up here and then all of a sudden it pulled back on you, you're thinking the end is nigh. It's not. Because this divergence is still intact, telling you that move is still good. Right? Down here, all the way up to down here. The market tells us what we need to know. It's just whether or not we're listening to its basic cues. That's a heck of a run. And you didn't really have to think much, right? And part of our problem is we can overthink our trades. And, you know, use this chart of Bitcoin as a really good example. Because, you know, in our Telegram chat, quite often we'll hear, you know, where's this thing going? Are we up? Are we down? Blah, 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 blah. Well, you know what? Isn't this telling us? Now that you have a structure on how to interpret how price is behaving, you don't ask yourself that question. You know, you're looking at the daily chart and you know that you're in a validated uptrend. That even your sideways consolidative price action never invalidated trend in any way at all. And, you know, it's been a staircase up since April. And when we look at today's chart, like, look, this divergence is still intact. Are we going to take out this area up here and create a new high? And then we're going to be having a conversation about, are we going to double top this chart? Right? That'll be the next thing that gets talked about. And this is the daily. Yeah, we could come up and have 2 equal points in price, but again, we've done that a few times on the way up here. The market will tell us when it wants a rest. And what is it reading? It's reading the money that's coming in and out of the market. If money keeps coming in, price keeps going up. If the flow of money stagnates or decreases, what happens to the price of that asset? Will likely fall. So we're interested in the money flow and the price action over a narrative. As interesting and as compelling as they can be, we're really interested in the money flow and what price does on a chart. That's what we focus on. Like, it's great to have conversations like about the verticals that we live and trade in. And I'm the first one to be there, believe me. But ultimately, it's the price on a chart. And this is just, you know, the scripting is just a simple way to manage and make safe, profitable trades. That's all we're trying to do. We're not trying to crack any kind of code, and we're not rubbing any crystal balls. We're just listening to what the market's telling us so that we can make as educated a decision as we possibly can. So here's our 4-hour Bitcoin chart. And I don't know how long this will last, but let's, for interest's sake, let's just connect these two tops and see what we learn. We'll just leave this here. This could get invalidated in the blink of an eye. But I would be doing this on the daily or weekly or any other time frame. Just trying to help me find another range. Now, what is actually interesting about this chart is that if it fails here and starts to respect this level, what happens to it? It actually works its way into this volume gap to the downside, interestingly enough. Not that it's a guarantee, but it's because we're looking at one of 3 scenarios: up, down, and sideways. The up scenario is that you've got a buy signal on your 4-hour, and the metrics that we use to monitor trend are still telling us that we're in an uptrend. That's what we know right now. The sideways we grind along kind of a range area. You can probably box in price, and then you grind along that range. And then the downside is what we just talked about. You work your way, or price falls into this gappy area, which we know is light trading. And because there's nothing there to hold it up, it can fall real quick. And what will it look for? Current price will look for past, and it will likely find, as it goes through this gap quickly, it'll rest on the point of control, which is this thin red line that is kind of averaging all of this back here. That's the downside. But if you're trading this time frame, your signal was to go long. But you're still monitoring, because we believe, like we trade, or I trade, based on three things: fibs, fractals, and filters. Right? The fibs give us those reversal points. Let's just do this really quick. May or may not be completely accurate, but we'll just work with this roughly. And we're looking at we're always looking for 618 as the benchmark for the pullback. And here you are at 105.8, something or other. So if price works its way down into this 618 range, what does that tell us? Or what would that be telling me if that was my trade? That level in the Fibonacci world is that area where I might want to anticipate a reversal. Right? And I think over the last couple of weeks we've shown that where that's happened, right? That one thing about crypto charts is that I believe they chart incredibly technically without too much outside interference. Like there's no earnings, there's no common news outside of vertical news. There's no earnings. So I think they trade nicely on the technical side. But that could be an area where if it does pull back to that level, the longs are going to say, okay, you know what, it's time to get back in again. That's typically what those are telling us. There's a psychological component to that. But we just trade on what's in front of us. That's all we can do. As long as the chart tells us to stay long, we stay long. Now, we know that when we're trading above the 20, the 50, and the 200, now I'm just going to remove the Fibonacci's just to clear it up a little bit. But we know that when we're trading above the 20, the 50, and the 200-day moving average, really on any time frame, you have to start to look over your shoulder and say, okay, at what point may I want to come back and start to tag those levels again? And it would typically start with the 20. So when price gets too far away, right, here's this move up, that's the 20, that's the 50, that's the 200. When you start to get lofty, well above the 20-day moving average, some people like to use an EMA, some people will use the 21-day. That's okay, like as long as there's some structure around what you're doing. But price will like to come back and test those levels. Now, if you're short, because we know that when we fail one level, we will find the next. In this case, we know that this really, I guess you could say it was a slight tag here, but not really. But this is a heavy candle that really rests on this 20. We know those candles typically bounce, right? Or they get some support. No bueno, not on this one. And the downtrend continues. So the most important takeaway from this would be what? I'm taking the candles off for a reason. Because we get often fixated on the candles, which are relevant, they are. But when we take the candles off and we note all of this on the right-hand side, this divergence between the T-line and the 5 EMA, that's telling us that this trend is still intact. The 20-day moving average that we would expect to get some support from, that we don't, in here, really tells us that there's something else going on. And this just kind of continues to break down. So we broke one level. Did we find the next? If we even call this an attempt and a failure, you basically wicked the 20 and pulled back, but feeble at best. But the divergence of what we use to monitor the trend is still intact until it isn't. And this is the important part. So when you're in the trade and you've been right this whole time and you feel real good about it, when the next turn comes, that doesn't mean you're wrong all of a sudden. It just means that it's time to take your toys and go home. That's all. And if anything, you were super right. And I see this a lot. Like, you know, people will be like in a great trade and you can't do anything but congratulate them on it. And then the next thing you hear is they gave away 3/4 of it. Thinking that, I thought it was going to go farther. And, you know, of course, by that point, you're in a whole other set of structure, right? So when you get down to these areas, these are targets. That's why we use them, right? Break a level, find the next. And even if this downtrend is intact and you're trying to find, okay, which candle is going to hit my target, I would use the 50 as a measure, right? You're waiting for price to tag the 50. It could be at this level or it could be at this level, but you are simply waiting for that to happen. But you don't need to feel like you have to chase your tail. You're on the right side of the trade. You're being confirmed that the trend is your friend, and eventually time and price will come together, and then you'll get this, where they touch. And somewhere in that neighborhood is your exit. And if you weren't going to use just the average, you're going to look for past price, right? So what's in here? If we go back far enough, you know, we kind of come back to in here where there's a bit of a base, but not much. Because pretty much, you got to remember on the daily, this level is almost all price exploration at this point. And you know, you can only go so high at once, FYI. But it's the breaking of the one level and finding the next. So you got a nice bounce off the 50. Another reason to buy off the 50. This one is a first touch, so bang, you get a real good trade there. And the other thing you need to do, so how do I know that price is going to be, or price is at or around the 50-day moving average on the 4-hour? It's really simple. Look at it. Right? Look at it. Stop looking at the 5-minute or the 1-minute or the 3-minute, unless you're scalping or looking for micro entries or you're super high leverage or whatever's going on. But the only way, because we show these things all the time, we show these fantastic moves off these longer time frames, the 1 hour and 4 hour. But people don't see them because they're micro focused on the smaller time frames. without the understanding that they need to be using a multiple time frame analysis approach in order to pick up all of these opportunities and pitfalls too. But if you're one of those people that does watch the 4 hour and you've been waiting to get into a long or looking for a good opportunity to get into a long, and you see price starting to show a turn at the 50-day moving average, which you're going to pick up also on your shorter time frames, you'll feel real good, even if you're entering off the 4 hour, because you'll have all that wind at your back, right? So don't think of, this big move down all of a sudden bouncing up as an invalidation of anything that you had in your head. Is all it was an opportunity to close your trade, and a real nice one at that. And if the conditions were right, to enter another one. Because we're indifferent to price, right? And I think this is one of the things that the investor side of people who all of a sudden venture into the trading space, and especially in crypto, have troubles with. Right? You have to determine whether or not you're an investor or a trader. Right? And the mindset is a little bit different, or a lot different, depending on who you talk to. So traders will focus on the right times to enter and exit trades. Timing is important, but they're only focused on that trade. They're not focused on what new product that company may or may not introduce and things of that like, right? They're only focused on what the chart's doing, not what anyone else is talking about or planning. They're only interested in their trade, because before they entered the trade, they had a stop in place, or they knew where they were putting that stop. And they also had an exit in mind. And those exits are the things that we're talking about, these targets that we set. And before the trade's made, you really should know where your exit is. Because if you want to take the anxiety out of the trading, make it a little more mechanical or automated, right? Whether you're trading spot or anything else. There's an entry signal at the 50-day moving average. This is ETHFI again. Right. This thing rocketed up to the 200. Would that have been a logical target? Right? Sure it was. The whole time we knew the 200 was there. And it never broke down. Even this little mild retracement in here, look what happened. T-line. You get a sell signal, but is this the first touch of the 20? We talk about this all the time. Yes. Did it hold? Yes. We see this all the time. The question now becomes, what was it looking for, or is looking for? And I think even when our friend Ben June was here a couple weeks ago, we looked at this and we talked about this, like, what could it be looking for? We dropped this line up here, this horizontal line, and just simply all we did, we just take some of this off. Do you see how these levels line up? So you've got, this is a daily chart. We have the T line and the 5 EMA in our chart. We show this all the time. Line up these levels. That's all I'm doing here. Why am I doing that? Because over time, the market has demonstrated to me that this is meaningful. I don't get in the weeds of anything other than price seems to like those areas. where I can do that. Connect the lower side to an upper side. And I'll do it on shorter time frames as well. And for some reason, it's acting as a draw for price. I'm sure there's standard deviations in that calculation too somewhere that I haven't looked into, but for whatever reason, it's a draw for price. Right? It's where traders have shaken hands in the past. So was this level in here, right? This level in here, where buyers and sellers have shaken hands in the past, and we've eaten it up. Right? It was support to the downside, and then it was resistance to the upside. Support, resistance. Same methodology. Let's see over time how close we get to this. But you know, if price breaks out of what we see up here, you know, it's going to be looking for areas where buyers and sellers have been in the past. Maybe it's, you know, maybe it's a little bit down here. Maybe we'll argue it's up here, but it's in this neighborhood somewhere. And if all of this gets invalidated, then it gets invalidated. You're not offended by it, right? You're not correct on everything forever. That's not conducive to what this is. Right? You know, eventually, something will move in the other direction. And when it does, you have the opportunity to monetize that as well. Right? You have because you're indifferent to price, it doesn't matter to you whether you're monetizing it to the upside or the downside. That's all that matters. How are you able to manage the trade? This move up here, now we know that the 20-day moving average is in here because I just had it on and I've turned it off, but this whole move was telling you you're still okay, knowing that the 20 was in here and it was the first touch. If your entry was down here somewhere, you're more than comfortable waiting to see how it reacts to the 20. And if it turns into one of those first touch bounces like this is, you're not going to complain. If it looks like it's going to break down, you just take it off. But you get to make that decision because you are at the right place at the right time. Like, you have to be there in order to take advantage of it. So that's again why we only want to trade or monitor a handful of things, because you don't have to have 12 things on the go at one time. I don't do that. 1, 2, 3 at the max. That's all I need to be dealing with at one time. But it gets easier when you have predetermined exits and entries, right? It does. It gets a lot easier. This is very wiki. Let's kind of move off of this and let's go to the SPY, which is the S&P 500, essentially. So let's throw on a 20, a 200, a 50-day moving average. This is a 15-minute chart. So this is a live chart of today. This essentially is our entry that would have fired, actually this confirmation would have come this morning, and it was a gap up to the point of control on the volume profile. So if you were kind of aware of all of the overnight movement and you wanted to long SPY in the morning, would you have a target on the 15-minute chart? Yeah. Point of control, because we know that price likes to go to where it's been before, and the point of control on a volume profile is one of those areas. That's probably one of the most magnetic. And what happened So there's our gap up. And we know this is the point of control. We know this is the upper value range. So what we understand is that we know that there's a gap there. Look what happens when price was able to pick up off the shelf, right? That volume profile is always going to be on a shelf. It picked itself up off the shelf. Right, look at the divergence in these levels. But it gets into this gap, and what happens? It blows through it. This is what we talk about all the time. How price can move in and out of these gaps with velocity. And what's really cool about this chart is that there was going to be some instant upside in the morning, but for a little extra gravy, you got to jump through this volume gap as well, which was a little bit of a gift. so you got two gifts if you were trading that. And as far as the chart's telling us, this thing is still has bullish momentum. Right? That's what we're concerned about. Are we on the right side, and is the direction of the trade still good? And the answer is yeah. Now, let's look for there. Now, for a few weeks, this thing was all the rage. This is layer. People lost a lot of money trying to short this thing, I'm sure. Right? But, if the way that we interpret a chart, you're getting support from the 20-day moving average, you're getting trading that's on the north side of the T line, more support from the 20. All of that is bullish. And at this point in time, no one has a disaster scenario in mind. Right? The thing is just bullish. And things stay bullish until they don't. And when they don't, you'll know. This was probably more violent than anyone anticipated. But is it doing anything differently than we talk about every week? I don't think so. Right? Impulse down, broke through those levels like they weren't even there. But then we have this sideways trading. And again, you know what's happening. As soon as you see that, everyone's saying, oh, that's the bottom. No, it's not. Because look how price is just walking its way down. Right? What did those little 4 green candles, what were they? They were just green candles in a confirmed downtrend. They didn't change anything. This wasn't an early entry long. This was somebody trying to cheat. This is someone saying, oh, how come every time I buy, price goes down? That's what that is. And it's just simply because the language of the market isn't fully understood yet. But the chart has been telling us, however irrational it may feel, what it was doing. Now, I can appreciate that you're not always short at the top, right? None of us really are. But, if you're trading these longer time frames, these are the ones that turn into absolute screamers. And historically, I think I would be taking these things off much earlier. And now I'm less inclined to do that because of this understanding. Right? Because of the signaling there that's telling me a story. Doesn't matter how crazy it feels. or appears. Like, I'm sure if you were saying, I think this thing is going to be at $1.28 in 2 or 3 days from an all-time high, I don't think you'd get many people thinking you were sane. And we have no way of knowing that is where price was going. Is all we knew is that the market told us that it was time to go or short. And from there, is all we had to do was just follow what it told us to do, which was stay short, stay short, stay short, stay short, stay short. And this is just unreasonable to the downside, as, ETHFI probably looks to the upside. And it is, right? But technically, we get real clean signals off the longer time frames, the dailies, the 4 hours, and the 1 hours. And surprisingly so. So the takeaway is you don't have to juice yourself up on a 1 and 5 minute chart to be profitable, right? You can certainly dial it back, kind of use the longer time frames as targets, entries, and exits. Look for the ideal setups using the multiple time frame analysis that we use to try and find opportunities where you see, getting signals at the 50, that to me is a Christmas present. Those kind of things. Right? And you'll find your ideal setups on whatever time frame you're trading. I know we have a bunch of people that love trading SOL, and they seem to do it successfully. And it's not something that I trade often, which when I look at the chart, I always say I don't know why, because it does chart nicely. But what were we talking about last week? What has to happen here before we know what's going to happen next with Solana? We have to see how it reacts to the 200-day moving average, which is what you're looking at there, the red. That's where our resistance is. We've had a nice run higher. We're getting support where you'd want to get it, but now you're starting to see resistance where you didn't before. So on the daily, the up, down, sideways. So the opportunity to the upside is you obviously start to break the 200. Price gets into these gaps, which is to the upside, and price can move through these areas rather quickly, and ultimately, that on the daily anyways would be a target, and that's the point of control, the most concentrated area where buyers and sellers have been in the past. That would be the upside, and then of course you can start looking up here, but that would be the first logical place. If we go sideways, we could see the 200 be some kind of prolonged resistance, and you just kind of get range bound. And then the downside, and this is where it gets kind of slippery. We've had several attempts at the 200-day moving average. So the more you're trying to break through, but yet fail, you kind of increase the probability that you might be failing the next time, right? So you'll fail, you'll back up a bit, take a breath, take another run. If that doesn't do it, you pull back, catch your breath, take another run, pull back, catch your breath, take another run. At some point in time, something's got to give, right? So that process can continue and chatter along, and that's the sideways stuff we talked about, or it breaks through, or it breaks down. If it breaks down, and this is where it gets slippery, if it breaks down, it's going to want to look for the lower value range, which is basically the bottom of a small shelf. And underneath that is all of this gray, which we know represents light trading, with a big gap in it. with the 50-day moving average right within it. So we know that this light trading and these big gaps can be more intense. So the velocity of price moving up and down these areas can be more intense than even up here. So that's the downside risk. You fail one level, which is the 20. There's the value range. You might find that, but I think what it would really want is the 50. So you've had a few attempts here and a few saves from the 20. You fail it, you look for the 50. Knowing that, since breaking out from it, it would be the first touch on a pullback. And then you're in this scenario where you're looking to see if that first touch on a pullback would hold. Like you're never done analyzing the chart in sense. You know, all the things, these rules that we have, we are consistently using them. And if you were to come back to the 50 and you didn't bounce, maybe your indicators, like some of the other things that we read, are overbought and look like they're starting to roll. Well, you know, that's a note to self as you're coming back to the 50. Yeah, so we'll see on the daily here, or sorry, the weekly. The weekly's still a bullish chart on Solana. What is it looking for? Somewhere up in here. I don't even know if it has that much more to take, but maybe, what's that? 204? 202? We'll see. Like here you are with a nice green candle at the 50, so on a weekly chart. That I like that. Certainly better than the red ones. What else do we have that you guys want to look at today? Let's look at a couple stocks. Microsoft. So,
when we get a chance, can you look at Rivian? I haven't looked at it.
Did you say Rivian?
Yeah, whenever you get a chance.
Yeah, well, let's look at it right here. So here's Rivian's daily, and I don't, you know, other than being an electric car manufacturer, I don't know much about the business per se. But if we look at the chart, back this up for a second. This is very chattery through here. That's kind of a consolidative period, you know, but we finally get, so remember our confirmation would come on this candle, this bar, so this would be flashing on and off as the stuff in the background figures out whether or not it's going to be a valid signal. But look what happens. So basically you're getting a nice, this is textbook really, you get a nice a nice green candle with a signal at the 50, and you know, you kind of pause out at the end of the day there at the 200. But the divergence, and this is, you know, kind of what I want you guys to notice more, like on your current candle, and this is going to help take some of the guessing away. All of this divergence is still intact, so you're good. Notice how it respects. What do we do here?
Guess it's support on that 200.
Okay. Interestingly enough, this red candle comes back and wicks the 200-day. And it's a heavy enough pullback that, you know, those shorter moving averages like the 5 EMA, you're going to see it dip. But it didn't break the structure of the trend, right? Like it didn't break any of this. It stayed intact, and lo and behold, we get to go a little bit higher. Now, I'm sure that if there is a ton of group speak, conversation, chatter about this company and others like it, whether it be Tesla or who, it doesn't matter. There's always a lot of talk in the background about these businesses. Some of it's valid, I'm sure, and some of it isn't. The only thing that's valid to me is what I see here. That's it. I have no idea what their product line looks like. I have no idea what their future product line is anticipated to look like. I don't know any of their projections. I don't know if they make or lose money. I'm assuming they lose it. Is all I know is that, in around $11, $12, you get a signal to long. And it rode up, still not invalidated, but, rode up to 16, 17 bucks. That's, does this look like a chart of a company that doesn't make money? The answer is it doesn't matter. As long as there's volume there to trade, I don't care if they make money or not. It doesn't matter to me. I'm not interested in that. That's not my interest as a trader. My interest is, did the market tell me to long the stock? Yes or no? Yes? Okay, then I'm going to do what I'm told, and I'm going to do that. Now that I'm in it, can I manage the trade? Do I have a system and a metric that works? Yes, I do. Okay, fine. Leave me alone. I'll be just fine. To someone else, maybe that seems crazy. But when you're comfortable in what the market's telling you, and you understand how it behaves, price, you feel a lot more confident in your charts and in what the market's telling you. And the confidence part is a huge deal. Feeling confident in your chart, that you're doing the right thing, that you're not wrong. You're not on the wrong side of a trade. Right? That no matter what the world says, you have conviction based on a rationale that makes sense. Right? Commodities are a good example of that. Oil, everybody wants it to go up all the time. And the fact is that it can't. Nothing can. Nothing can. But the market will tell us how it's feeling, both on short and long-term time frames. This is a weekly chart. Where we, people that probably saw us in here talking about oil at 61, 66 when it was a heck of a lot higher would have thought we were insane. But we're not insane. We're just listening to the market talk to us and tell us what it's doing in real time. And it will repeat its behavior time and time again. Last week, over the course of the weekend, this was another one. If I heard any more talk that, oil this is the bottom, and, now we're probably going to make all-time highs, and this thing, blah, 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 blah. Really? Really, the same person was saying that up here. And here, and here. How about this? You don't know what you're talking about. Maybe you know about the oil business, right? There's a lot of very knowledgeable people out there that understand the intricate workings of the oil business because it is complicated. However, do they have the ability to read price on the chart? Those oil experts were telling us that, to expect something different. The market will tell you. You don't tell it. The market will tell you. as an analyst, which I'm not in the oil business, something's wrong. So back up here at 95 bucks, almost $100, if you were to say to someone, well, I think you're going to find, $61 in the next 12 to 18 months or whatever it turned out to be. Once they got over the shock, they would say, well, if that's the case, then something's really wrong. Fair? I think it is, right? That's what I would say. Well, here we are. So what is it that's really wrong? I don't know. I still don't know. But the people up here who didn't want to believe that this was possible would say, well, if that's the case, then something's really wrong. Because that doesn't make any sense. And they'd be right. Something would be really wrong. But we don't have the time, money, or energy to pontificate about what that might be, because the same people that are trying to figure it out were the ones that were wrong up here. So where does that leave us? It leaves us being able to do one thing: read the language of the market, interpret the language of the market. The chart is telling you. Another example, if you want to know or get into the camp of what's really wrong, or something would be really wrong, let's look at this again. Because I had a conversation with someone today, and that was their point. Is that, my goodness, if we get down here, then something's really wrong at 130.5. Right? Why? So what am I doing here? Well, there's the up, down, and sideways scenario. Right now, we're making lower highs. Right now, we're under a weekly down signal, which has been there for quite some time, and it doesn't show any signs as of yet. This right now is just a green candle in a downtrend. This is a structural level, obviously. So it's an area where you can anticipate price to maybe revisit again. And here we are again, connecting, using that 5 EMA range. Could also choose up in here, right at 133 or 132.6. You could make a case for that as well, but I'm just choosing to pick the bottom of it. Yeah, something would be really wrong. What? I don't know. I have no idea. All I know is that with any asset that I've ever traded, on any time frame I've ever traded it on, when you break the 20-day and 50-day moving average all at the same time, bad things usually happen if you're long. That's what happened here. In conjunction with your sell signal, in conjunction with being a lower high. Broke one level, find the next. Just for fun. This thing's broken everything. So even if you so the bulls are going to have a different argument, right? And that's okay. So what's the bullish side here? Well, you break out from this level and start to challenge the 20, right? All of this is technical in my world. All of this is technical. But first off, we don't even have any kind of confirmed reversal here whatsoever, but let's pretend for a moment that we did. This is the first touch of the 20 at an area that you can see is also somewhat structural on this time frame, at least through this neck of the woods into this area in 23. There's a lot of past price that you can line up there. This would be the first touch, as with the 100, as with the 50, on a weekly chart. So you would have to believe, if you're going to, open up your wallet, that you're going to blow through all of this resistance in one shot. I don't know. I I think you would probably have a better chance of hitting your head and getting a significant rejection up at this level than you would blasting through it in some sort of V-shaped um, reversal. And even if that was to happen, then you have to kind of find out whether this level will be respected as well. And I think that's a big ask. This is still, these are just green candles and downtrends, a green candle and a downtrend. Is it attractive? Does it get people excited who want to go long? Yes, but is it validation? Absolutely not. Not yet, anyways. And when it changes, we'll change too, right? Like, how do we pick up? How are we going to pick up the subtle changes in the market? We're going to pick them up on the shorter time frames, right? That's where we're going to start. And we're going to throw up a volume profile because it helps us find the areas where price has been and where it has not been. So here's the 15-minute that we looked at of SPX before. The gap up that we talked about. I think this is, maybe we looked at SPY. Nevertheless, same chart essentially. Where are we finding a little resistance? At the point of control on this 15-minute. Went through the gap without a problem. But if we start to see some resistance anywhere, we're going to have an issue. So we're well above the 20, the 50, and the 200. At some point, we're going to want to come back and make contact with them. You just don't want to do it in the middle of a gap. But right now, the chart's just saying that it's still bullish, right? So I always find that if I identify the downside risk first, it becomes tomorrow's opportunity, right? So yeah, you're all excited that price went up, and if you're on the right side of this, you're going to stay on the right side of it until the chart tells you and the market tells you not to. But you already have an idea of what to anticipate on a pullback. And that's why, just trading a handful of things is valuable. Because if you trade too many, you're just not going to have the time to find those little nuances that matter. Like, I myself only trade a handful of things over short time frames. Longer investments, that's different, but just a handful of things. Like, I'm old now. I don't have the capability to juggle stuff like you guys do, right? So I got to dial it back, but I think it's better for everybody. And remember, no matter how crazy things seem, it's just a chart. It's just the market expressing itself. It's money expressing itself in real time. That's all it is. And once we're into it, we have the ability to kind of determine where it might want to go so that we can have some exits, entries, and reversal points. This is NVIDIA, probably one of the most talked about monsters that we have. And how do you block out the noise? Right? If you own it, you probably want to be part of every chat group you possibly can because it just feels good. Or you just read the chart or listen to the market. And you'll find that much less stress, and the market will tell you exactly what's on its mind. Whereas the chat rooms don't necessarily do that, because they're not there to give you tangible information that you can use in your trading. They're there just to pump tires of what they own, right?
Mr. Blunt, may I, you may have noticed my voice changed a little bit. May I give 2 charts? I'm asking for a friend that happens to be my wife.
Well, in that case, yes.
TRB and init.
TRB as in Bob?
Yeah.
Am I on the right thing? Tribal?
Yeah, that's it. TRB, right?
Yeah, it's looks like it's
TRB USDT. It's a crypto.
okay.
It's I think it's called Turbo.
All right. Okay. That's it?
Yeah.
All right. So let's look at a weekly because, well, so we have to look at these charts no differently than we would look at anything else. Weekly chart, obviously a lot of consolidation, but a weekly chart with a buy signal, there's nothing wrong with taking it because you just don't know where it goes next. With things like this, where they've kind of just been suppressed and beaten up for so long, the trader's hope is that one day it goes parabolic and it retakes a little bit of what it gave away. And, this one's doing that a little bit, and what is it doing? Well, I rest my case. So here's the gray area of the volume profile that signifies that light trading. The volume gap is obvious. Price gets into the gap, this is a shelf, gets into this gappy area, and bang, it heads straight to the lower value range on the volume profile. Trading in and out using these gaps, whether they're support or however you want to characterize them, but they're created by candles that were filled with fairy dust and air that don't have the ability to hold back or hold up price when it gets into that range. If this was, what you don't want here, Eduardo, is this thing to be just a giant wick and price settling in here, right? This is an example of where, if you're trading, you have this big, massive move up. This would automatically be a target. Like sometimes when I trade stuff like this, I'll set exits at these types of areas just in case something like this happens. And once in a blue moon it will. But the weekly chart, you're getting a nice clean signal, and the upside opportunity would be the point of control. Holy smokes, which is way up there at 116. So yeah, the risk reward on this doesn't sound too bad, right?
What about Init? I'm curious for her to see what you
Sure.
think about it. And by the way, thank you. I guess you can call it thank you for your rant, but it's so precious to
I
hear.
was gonna say which one.
Yeah, well, just the one, No, I don't call it a rant. I call it a mantra. It's so valuable to try to nail that into our heads.
Well, I guess what bothers me is that, like, I felt at one time like a victim to this market or a
Yes.
market, and when I turn back the clock, I think a little bit of it came from like me falling into that trap,
Yeah.
right? Of listening to things that ultimately had no bearing whatsoever to price on a chart. And that in the end, it wasn't intelligent information, it was literal group speak. And you become part of that. And that wasn't conducive to being successful, right? It's what probably I fell victim to. So, maybe it makes me a little more angry when I hear that, because as I hear it, I'm thinking to myself, you know what? 50 people probably did what I did 30 years ago. Made the same mistake. And you know what? If we can get a handful of those people in here, like in this FEG stream, or you know, in the Blumhouse Telegram or anywhere else that we are, if we can just get to a couple of them, it makes me feel like we've done something, right? And you don't have to be a victim to the market. You don't have to fall like that. It's, you know, it's not a prerequisite. Like, are you going to have challenging times? Yeah, absolutely. That will never change. But you could be armed with better tools to help you navigate those times, because you're focused on what the market is saying, not what people are saying, right? The market's telling you what it's doing in real time. And we don't have to be the victim to all of that stuff, right? Like, I got caught up in some wireless internet high-speed provider back in the day when, you know, sounded great, everybody needed it, but I didn't know anything about the stock market. I didn't know anything about stocks. I just knew about mutual funds and things like that. Tried to venture out into a new space because, hey, you know, I'm in my late 20s, early 30s now. I'm an adult. I know what I'm doing. Bam. Bam. And it turned out not to be true. I didn't know what I was doing, right? And the people that I was listening to didn't know what they were doing either, as it turns out. I just didn't know that. I didn't even know that I should be looking for something different. But, you know, now I'm aware, and everybody else can be aware too. And I don't care how crazy it sounds, right? Like when I first met you guys, it's when Bitcoin was going parabolic. Put up my hand one day and said, you know what, you might want to kind of prepare yourself for $30,000 Bitcoin. And a while after that, that's what happened, and nobody wanted to talk to me after that. And then, hey, where's that guy that said Bitcoin was going to go to 30, right? And kudos for you for actually saying, this group, like, maybe there's something we need to know here. Right? And as we've shown time and time again, this is in it, by the way, and you know, the 4 hour, it's a fairly new issue, so there's not a lot of price here, but I think that if you're going to buy it, now's not the time. I think there's still more downside here.
Or short it for that matter, right?
Well, that's the other side of it, yeah. There's that possibility, right?
Mm-hmm.
So, but yeah, that would have probably been back here, right? In 21. And as this thing was going to roll over, there was really only a little bench of past price that it could find to rest on. I think it was on, if you look at it on the daily, it's probably a little more pronounced, but where is it? Yeah. Kind of through here. Not a lot. But that's exactly where it went. And the interesting thing is that that level of 30,000 has become, you know, over time, an area that price has respected several times as support and resistance, right? And it's just a simple matter of current price revisiting past. That's all it is. This is just the trend line we drew on the 4 hour on the daily, that's all. And we'll leave it here. We'll see what happens to it. The price could eat it up by the end of this show. Who knows? But the chart, no matter what this individual candle says, the chart itself is still bullish. Right? And that's, at the end of the day, that's what I'm respecting. And if you do get a reversal, and you were down here as an entry, you're going to have a stop in place. Right? You would have moved it from down here, right? Like, you would have a stop in place. So if there's a disaster candle that happens, you'll be okay. You'll get checked out with a ton of profit. Just don't give it all back on the way down, right?
Yeah, we don't want to do that. Don't do that.
Stop
Do that.
Stop it. Yeah.
Oh man. Hey, sorry, Blumhouse. I've been here this whole time. Haven't been able to chime in, but just want to say thank you, man, for taking the time out today to do this for everybody, man.
Well, listen, I appreciate you guys. You guys have helped me just as much as maybe, hopefully, I've helped you. So, like, I remember when I first kind of walked into this crypto space, like, it felt like I walked into a dark, smoky room with a blindfold on. Like, I had no idea what was going on around me, and you guys saved me, so thank you. It's kind of cool that, like, I find it, for me, like, it's a real pleasure to be able to talk to you guys on a daily basis because I hear things that I wouldn't hear otherwise, right? About, hey, stuff that goes on in your worlds, or, how you feel about certain things, or how, you interpret your trading. Like, for me, it's a benefit to be here with you guys. Here's another example of current price revisiting past. I know we've looked at it last week too, but I think it just looks a little bit more doable today, even still. This is United Health,
Ouch.
right? And this this line that's here, actually the blue one, I was asked way up at the top where I thought this thing was ultimately going. And what did I do? I drew a line across those levels that I talked to you about, trying to line up using the 5 EMA and the T line. I don't recall why I dropped it down here so low, but I did for whatever reason. And there we go. Right? We struck right through it on a weekly. Like, it just blasted, hit it. But what do I think it really wants? I think it really wants this down here, which is 200. Now, I know we're trading at 290, so that's a $90 drop. But what was this? Right? That was a $400 drop probably. And the chart, so look what happens when you get into this again, right? There's a weekly chart. Here's all this gray light trading. There's a gap. It just capitulates. And this is important because you're going to see these types of things all the time, and I highly suggest that you use a volume profile of some sort, because it is going to tell you where price has been and where it has not been, and that's relevant to tell you where it might go. So the downside risk on this weekly chart was breaking the POC and getting into this gap. And once you do that, you're like, all bets are off, really, right? Like, this is where you would kind of anticipate a hold, but like, it literally took a target. And probably again, I think might want the 1,000-day on the weekly. I know it sounds nuts, I know that, but so did 268.
Whoever shorted that,
Someone did.
shorted that from the top,
Yeah.
or even the second candle in, like,
Yeah, I don't think you're worried about the pennies at where it was up here. If you did it, you did it. And I think, like, look, again, this could be any asset in any time frame, but this could be a 5-minute Solana chart, right? This could be your 5-minute Solana chart, and you have to make a decision, or you make a decision on whether to short or not. Like, it could be anything.
Solana definitely has its little 5-minute windows or 15-minute windows. It does exactly that.
Yeah.
But for the most part, it looks like what's on the left of that major dive. But yeah, I think you see those bigger dives and like the larger time frames. Definitely, like maybe like a 1 hour, 4 hour, more often.
Yeah. I like, where are we? Where's futures? Sorry, up here. I like to use the 15-minute chart and the 1 hour chart on futures, to try and get an idea of, maybe you can catch a larger move. Let me just pull this profile in here. So this is really interesting. All of this, so this is the upper value range on the 15-minute ES chart, which is the contract, right, for the S&P. So technically that's a premium, right? And all this light trading here, for all intents and purposes, is just price exploration that's really not supported with a lot. So I would be very wary of the next rollover or retracement with this, because we know there's not a lot here in the first place. It wouldn't take much to bring us back down to the upper value range. So we start looking again, right? We got to look over our shoulders. How far away is the 20? How far away is the 50? How far away is the 200? Just to try and give me some sort of scale and scope about how long we've been extended and where we would possibly come back to. Are we still in a bullish 15-minute chart? Absolutely. Right? You can't argue with this. This is still bullish. But if you're looking for the short trade here, you have to be patient and just wait for the market to tell you. Maybe you can try and bring your time frame down to the 5-minute and start to catch this early move if it does roll. The 5-minute as well is kind of trading in what we already know is light volume with some volume gaps beneath it. We have not made contact with the 20-day yet on this 5-minute chart. So when we do, there's a higher probability of it bouncing on the first touch. So, we kind of just have to go through this evaluation process each and every time. Kind of curious to what the 1 hour looks like. That 1 hour chart still looks like it has some gas in the tank, and look what it's done, right? Worked its way through this volume gap on the 1 hour. Right?
Looks like it could creep up to that next level.
Yeah,
Little.
it would be totally logical to be expecting 59.3650. Whether it's today or tomorrow, I don't know, but it would be logical to tag that level, right? It would be a draw for price. And of course, you're going to start looking at other time frames to see what the chart looks like. This is a big green candle on the 4 hour. And it still looks like it has some gas. This still looks like it wants to move a little bit. So, to dial it back again to the 5-minute chart, if you're waiting to short it, you really have to be aware of those longer time frames, because they're kind of the dominant ones, right?
Can you throw on some filters? Specifically the three that you like to use:
The
Stock RSI,
yeah.
Fisher,
Sorry, yeah,
and the MACD.
yeah. So here's the 20. Let's see what happens when we get to the 20, right? Do we bounce and then we try and double top that, or what? But here's
that blue one is the 50, correct?
Yes, the light blue is always the 50, the green is the 20, and the red is the 200. This is our stochastic RSI, and kind of another example where it has rolled over, and it's well below 20. So we know that we are oversold, but we have to understand that on the stochastic RSI, it's quite common to kind of drag a level like this, like in this case below the 20, And over here you have it well above 80, right? So it's not uncommon to see them hold for an extended period. This is, to me, on this 5 minute, this is obviously not bullish, right? That looks like it's a little pressure there. The Fisher, which I find really cool, just helps filter out a lot of the chatter. It helps filter out these false breakouts and interpretations, and it creates what they call a Gaussian channel to filter all of that out. And essentially, when you see it, like you see it here, you know, it's telling you that that downtrend is intact. Here, it would be telling you that this is pretty clean to the upside until you see these types of things. Those are usually indications that it's doing a little bit of a shift, and they're easy to pick up, and that's what I like about it too. And as far as the MACD goes, and these are in order for a reason, because this is usually the first that goes, this stochastic RSI, followed by the Fisher, and then the MACD. And the MACD is kind of interesting because, you know, we have our zero level, and we have our moving average and signal lines. When the moving average and signal line is above zero, typically more bullish things happen than bearish. When it's kind of hanging out below that level, it's the opposite. More bearish things happen than bullish. And I often find you can have these two indicators be negative looking, and the moving average and signal line will be above zero on the MACD. And you're thinking, okay, this is the top of a big rollover, right? So in other words, you're kind of thinking that it's going to do this, right? And kind of do that, oh, basically V down move again, when in actual fact, what ends up happening is above that zero level, it does this kind of thing, looks like it's moving down, and then all of a sudden does this again, and then that. And you know what I mean? You'll see that. So I always get really, and I've been burned by it so many times, that I've noticed I best kind of respect it. So we will see what happens here.
I catch myself because I've been burned so many times by either the stochastic RSI, you know, dragging at the bottom or at the top, that now I've kind of not been afraid, especially in the shorter time. Well, it doesn't really matter. It's in the longer ones too. But sometimes I'll enter, especially if I'm day trading, right? I'll enter even when it's, you know, dragging like that. Like, okay, this thing's just got momentum. It's going to keep going. And then, like you're saying, I look at the MACD and I'm like, all right, it's still above the zero line. So I've seen, like you're saying, I'll hop in it. Like you're saying, sometimes you get burned, sometimes you don't, but it is what it is, I suppose.
Yeah, I think what I was trying to illustrate on this chart is that, so here you've got this nice move higher, right? We know we have the support of the 20 here that hasn't been tagged. We have kind of, you know, bearish indication, and if you're looking at the MACD with that moving average and signal line above zero, I am less inclined to short this move, because quite often, like I said, it looks like it's going to fade a little bit, and does, right? But it just ends up being a very mild retrace. The moving average and signal line are still above the zero level, and boom, price takes off again. What I prefer to see is my moving average and signal line below zero while this is kind of going on, and then making this short is a little safer, in my experience.
Yeah.
Do you know what I mean? So for whatever reason, and what's this really telling us? I guess in a sense, maybe that, you know, the buyers haven't necessarily left the building yet, even though they're taking a bit of a cigarette break.
Yeah, that momentum's still there.
So now if you catch this as a big dive, totally other story. But I just find in general trading and the ebbs and flows of how price moves, my ideal setup to short this move is when we're either breaking zero or already have.
Yeah. Crossover.
Yeah.
Now, what does it look like on the 15 real quick? See what the, okay.
Yeah, it still looks really strong.
Mm.
Now, you start to pick up little things, right? But it's not meaningful until price tells us it is. And right now, this is still a bit of a bullish chart.
Trading above the
Yeah.
T line and 5 EMA.
Yeah. You could use if you want to get.
Yeah, I would probably look to short it if it hit the T line, if anything.
Yeah, you'll
Possibly.
if that's the plan, like if you were following this chart and you were, your next trade was going to be short, wait for your entry, maybe dial the time frame back a little bit on the 5, and when you start getting a signal on the 5, maybe that's your early entry on the 15 or something like that. But wait until you start to get signals, because if you try and jump it without anything, chances are it'll run on you before you even get a chance.
Absolutely. Yeah.
Run that ass, Mike.
Yo, it's risky, man. It's risky.
Yeah.
Nah, but definitely, man. The 15 and the 1 hour, I feel like are good, and then the 5 narrows it down a little bit more.
Yeah.
But like, definitely for like something decently leveraged, not like 100x, not 150x leverage. But that's a little out of my scope, right? But even like 30 to like 75x, right? That would be a good window where you can see some little movements and really get a gain for sure.
So look at it like this: assume that you're going to make a mistake, and leave yourself enough wiggle room for that mistake.
Right.
So
Like there's been some trades, man, I get into, right? And I'll give myself that wiggle room, right? And the trade it'll drop. It'll drop right there, like damn near like $1 away. Like if I breathe and it goes down, like I'm liquidated, And sometimes I have to widen that range up, and I'm like, man.
yeah.
Typically at that point it turns around,
Yeah.
and then I probably get like a 70% or some shit, but it hurts watching your shit go down like 50% just to turn around and do 70%. Then you're like, 10 packs of cigarettes later
Yeah.
in 15 minutes, right?
There's probably a little too much juice there to cause that kind of stress, right? Like, all you have to do is dial that one back. But this is Tesla, guys. Like, regardless of what you think of the company, you get a buy signal on this weekly, and it's had a good push. Is it a little tired? It's maybe. But actually, the chart, it still looks like it wants to move a little bit higher. And what's it going to look for? It's going to look for concentrated areas of past price. But where do you see the breakdown? If there's going to be a breakdown, you'll see it on the 1 hour and 4 hour first. That's typically where you're going to pick that stuff up on the shorter time frames. Now we look at the Dow, let's look at the Dow. Take the volume profile off. It doesn't like it. So if we were there's the Dow. This is Friday in here. what would your next target be real quickly on this time frame? That 200-day is probably what everybody's looking at. And here's our current candle, basically right at it. So if you were long down here, kind of off the 20, you would know that your first little bit of resistance would be the 200. And the market's trying to make a decision here. You have to understand what this means on the daily. This is your basic bull bear level. So the market has to decide whether it takes the 200 and trades consistently over it, or does it say I'm not quite ready yet and pull back and take another breath. That's kind of the decision that it has to make. It's already done it on SPX, so. So, maybe this, so what are we doing here on SPX daily? So we've pulled back, we've bounced. You got major support here with the 20 and the 200. And now current price is looking for past. Just how we show how you can take out the previous wave's low, what we're looking to do here is take out the previous wave's high.
That's a nice gap up too.
Right? Now,
Daily.
That's the daily, yeah. And of course, it's going to happen once, price gets up to this level, then people will be saying, that's a double top, that's a double top. Right? And maybe it is, we won't know. But here's your move higher, here's your retrace. Your next move up could fail here and roll over, or this could just have simply been a pullback in a further uptrend. Right, that's the other option. So we're going to take out this high and try and test new levels, or again, do you fail, come back to here, and we start this all over again.
What's your volume profile look like?
Okay.
Yeah, I don't know. That's looking like it could really run if it doesn't drop back down. Absolutely.
Okay. Yeah, my target would be
Oh
that.
yeah.
So it kind of adds a little bit of context, the volume profile, especially in this one. I think it shows the gaps a bit better. But yeah, the downside risk is you fall into here and you come back to the point of control and the 50, or you jump off of this shelf into this gap and start pressing for the upper value range, which would also be kind of all-time high area, would it not? Yeah. So, like in the sideways option, I don't know. I just don't feel it. I just don't think there's going to be sideways stuff here. I think we're going to either test those higher levels or pull back. One of the two. I just don't see us flipping coins along sidewaysville here for very long. So. But another example where you have this.
If I was to make an educated guess, right? Not that I'm educated or nothing, but to me, that little drawdown, that little pullback, that was to get that 20-day out the way, test that level, and show that it's about to trade way above that.
When you look at it today,
for a little second.
When you look at it today on the heels of this big green candle, it kind of feels like it was a flush candle, right? That's what it's looking like. But the interesting thing is, guys, is that here you have your nice move up, and even this retracement back to the 200 wasn't able to drag the 5 EMA down through the T line to trigger any sort of a signal.
How do you feel about that sharp point, Blunt? Not to cut you off, I know you always say you like those sharp points in the T line and the 5 EMA all the way to the right, that candle all the way to the right.
Yeah, those, when you get big moves up or down, it draws those shorter time frame indicators and pulls them accordingly, right? So like down here, like this big move, there's some gappiness down here too, but like it pulled this level down and created a point, and that's usually an indication of that impulsive move down snapping back in a reversal. In this case, you've got real nice move up, a pullback to the 200, and you point out there without breaking trend, and the divergence to the right side of that candle, if you can see it, is still there. So it's actually telling you it's a snapback candle.
So on the left side of that green candle right there, it
On the
kind of has
23rd.
the with the green indicator on the left of that, like those two candles, right? That kind of has the same pattern as far as like the drawdown and then the pullback up, I guess.
Yep. And this is where everybody gets faked out, right? This is a daily. It could easily be a 4 hour. It doesn't really matter. But it's the individual movements, whether the intraday movements, that type of stuff, or daily movements, that freak people out. Right? That's really what people go crazy with. Like, unfortunately, in this move down here, people would have scared themselves several times and probably would have closed this trade when it was going to run. And maybe even the same to this one on the upside. Right? You see a few red candles and you start to go, uh-oh. But when you have a means and a metric that's telling you that the market is still good in the direction that you're in or not, it allows you to understand that you can stay in the trade without too much fear. But ironically, the fear that I get now is because of this stuff, like this massive movement in price. Like the Dow's up, 700 today? Like all these big movements up and down, it's really not a healthy thing. Like, picture yourself hooking up a heart attack patient to an EKG machine, right? That's what this market kind of feels like unregulated price movements up and down that are erratic. Like, it literally feels like it wants to have a heart attack, right? Our job is to make sure that if and when it does, that we don't necessarily get hurt by it and actually monetize it. That's what we want to be able to do. We want to be able to monetize it. If this market was to roll over, here's another example on the weekly of where that might be. So we've broken the 20, we found the 50. We're obviously playing with them all in here, so there's some sort of an inflection point. If we fail, does the 200 not become that next level? Yeah, it does. Yeah, I'm not saying we get there in a day or 2 days or anything like that. It's just all a process. But if this, if you don't take off here and start to test these other highs, and you do break down, you have to look to take out the previous wave's low, which is at least down here. That's the downside. And you got the 200 here as well. And I've obviously lined up this price for a reason. So we'll see. Nobody is thinking on any weekly chart right now, whether it be NASDAQ or the S&P, probably even Bitcoin for that matter. No one's thinking about coming back to the 200-day moving average. Like, you couldn't even talk to somebody about the 50-day moving average right now. Probably not even the 20 at 94. No one will want to talk about it. But we've seen time and time again how these things prove us wrong. Right?
Yeah, selfishly, I would love to see that happen, Blunt.
Oh, I think a lot of us would. And, I think at one time it may have seemed like they were for selfish reasons. But now I think it's the health of the market reasons, right? Like, there needs to be some sort of a balanced, like, you know what, I don't even care if it's up or down. It's just for the betterment of the market, it would be better if it was more balanced, I think. So not this constant parabolic movement up and down that's just driven by really just news, and not even good news, right? Or like,
In
it's
the good
just,
word of my friend Blunt House, who the hell cares? I'm just gonna monetize the chart.
yeah, like, it's pretty fun to watch it.
No, I hear you, Blunt. I'm
It's
talking
to it's
shit.
to I know but it's toxic to us, and at the end of the day, is all you have to work off of is the chart in front of you, right? That's it.
Yes, sir.
Like this Bitcoin
Yeah,
chart.
I'm trying to monetize these charts, man. Like last night I had a crazy headache, and I was at my mother's house and had my eyes closed, sitting in the living room, and all of a sudden a whole bunch of shots get let off right in front of the building, right? Didn't even flinch, didn't bat an eye. Just went to sleep. Wake up today, there's like a whole crime scene in front of the building. It was taped off with yellow caution tape. A whole bunch of investigators and detectives here. So I need to monetize these charts, and not be around this anymore. Not to mention, it was like a murder here last year. Somebody got stabbed in a parking lot to death. And yeah, this is like why I'm in here on a daily, like, bro. Yeah.
Yeah, Blunt,
Listen, this is why we do this.
get up out of there.
That's right. Anything else you guys want me to look at today?
Um, would you mind looking at XMR?
Oh, wow.
Oh man, he's running.
Well, isn't that something?
Man, I tried to warn people when it was at around like 188. I try to tell people about it. I don't know where 188 is on the chart, but I can't really see the screen.
Dang, Mikey, why didn't you tell us?
Bro, what do you mean, bro? Yeah, I tell everybody, bro. If you in welcome to the jungle, and you in Ape Tank, you definitely
No,
need to get some
I
more.
saw it in the chat. I'm talking shit. But yeah, it's
Nah,
running. It's running, man.
Yeah.
What's that?
it's at like 390 something right now.
385.
380. Oh.
Yeah. That motherfucker gonna run.
Mhm.
So yeah,
I wanna,
you'll see where this
I
goes.
wanna,
Like, it's been, maybe it'll
I wanna,
retrace a little bit, but
I wouldn't be surprised if it passes BNB.
another good example though of just, working off a longer time frame. You get a nice clean signal off the daily. You would have caught it a little bit earlier off the 4 hour, right back in here, and that would have been off the 50-day, which is more reassuring. And boom, like it didn't change until today or yesterday, whatever. But what has it done, right? So you get that signal at the top. The divergence that you would see to measure the difference in trend is there, right? You can see it. Break one level, find the next. Break one level, find the next. You'll probably find this first. That's the 100. So, there's if you were to catch the wave on the way up, that's fantastic, but you know, there might be something here on the way down too. I don't like the fact that it broke the 50 and 20 like this at the top. And look at this gap in here. Like if it gets into this, it'll find this lower shelf or this upper value range pretty quick.
Could even drop to 200 or below.
Yeah, you know, it's all possible, but we just like you just manage it once you're in it. Like if you were short at the top here, is all you're doing right now is just, you know, watching it go to where you think it might go next, which I think is into that little gap there. Right, but you're in the driver's seat. That's the beauty of this, right? You're in the driver's seat. You get in at the right time, and then managing the thing isn't stressful at all. You just have to, it's just the time that it takes that will drive you nuts. But
You trading this thing, Mikey, or are you just holding it and DCAing?
No, honestly, I just shared the information because I didn't even hold a single XMR, bro. I've literally been researching it, you know, and knew about it for like almost like 10 years now.
Oh,
But,
damn. Okay.
yeah, I just don't hold it. But I would have definitely held it this entire 10 years if I had it. Definitely.
well, but as far as, you know, can you trade it? Absolutely, right? So don't be afraid to trade it. This
Hell
market's
yeah.
going bananas today, boy. Yeah, so
My
does this
bad.
make-
I
does
was eating the orange, but yeah, definitely I'll look into trading it.
like it had, you know, when we were looking at the chart, it was quite smooth as far as its price action goes. So that's that means a lot. That helps a lot. Litecoin's another one that little chattery lately, but does it want to break out? Like here you've got, let's see. This is one of those things that, you know, the upside opportunity, you blast up into this volume gap and look for the POC. Kind of that one could run. But a lot of these charts look good today. Like everything looks pretty good. Except oil. So does that make any sense? Like the stock market's going crazy. You're up almost 800 points, 700 points. And on the assumption that the economy must be okay, that's why the stock market's going higher, because things are good, right? But yet the oil we need that drives the engine, the price just keeps falling. One of them is right and one of them is wrong. So we're going to find out over time which one it is. But eventually this big move down will stop and turn around, but it's just not today. There's still more downside here, I think, on oil.
So typically, blunt, cheaper oil means a bad economy. I mean,
Well,
or
no,
how's
so
it been typically in the past?
if, you know, cheap oil keeps your gas prices down, right? That's basically what's happening. As long as the oil stays cheap, gas can stay cheap. It is a lower input cost when oil is cheaper. So, but that would allow, you know, more profitability on the corporate side if your input costs are lower. The problem I have with, and this is why we read charts, because I can't make sense of the whys. And, you know, maybe I'm not qualified to make sense of the whys either. But all I know is that for whatever reason, I should actually back this up even farther. It's our weekly chart of oil, but for whatever reason, since back here when we breached 100 and change, nothing has really gone positive. Like, and that's back into 2022, where we've had this constant fall. No matter what else has been going on, one thing's been consistent, and that oil has trended down. Is it because we're using less? No, because apparently we're using just as much as we ever have. Right? So all of the metrics that we want to measure with, you know, can we build a case on that can support it? Sure. But ultimately it's the price. Right? So again, coming back to what we talked about earlier, you know, when oil was $95 approaching 100 and you tell someone it's going to 60, the natural response is, well, if that's the case, there's something really wrong. Just like in the conversation I had earlier today about USDJPY. And that person's right. If we get to that number that I see as a possible, that would mean something's really wrong. I don't know what it would be though. So here we are at 60 bucks. So what's really wrong? You said something was going to be really wrong if we got to this level, so what is it? I don't know. I'm sure the person and the people that thought that don't know. I guarantee you they'll have an opinion, just as valid as what they thought when it was up here, however. I don't know what's going on with this. I just chart it. And for some reason, I've always had this thing in my wheelhouse. I don't know why. But it respects technical levels really, really, really well. Like, look at this $41 level, right? Look all through here. Nobody thought when we were up here that we would see that $40 range again. But we did, because current price revisits past. And it keeps looking for a bench to sit on until it finds one. And when you have big drops like this, right, it's because there's no bench there for it to sit on, right? There's nothing for it to sit on in here. Once you break the structure, there's nothing left for it. And it will continue to fall until it finds that price. Let's go back to, you know, just to prove a point. Do you remember years ago when people were saying, oh, you know, $20 oil and all that stuff? Where did those numbers come from? They came from the past. Like back up the charts in time. Actually, you could probably even go shorter. Nope. It's just not giving us enough volume back there. 1986. $10. Fast forward to 1999. Basically brought you back to the same level as 1986. Did anybody think that was possible? Probably not. But there they were. Sounds ludicrous at the time, but it is just a simple matter of price doing its thing. Current price revisiting past, looking for benches of past price to sit on, and it'll continue to fall until it finds one. That's how it works. This level in here, again, of 30 bucks, like look at there's a lot of price back here of these levels. I'm not saying we're going there, but I'm just saying all these things kind of unfold over time. Time and price have a way of coming together. And the best way to determine where price may go on the right side of the chart is simply to figure out where it's been in the past. That's all. That's it. That's really all we're doing in here. Simple as complicated as that. And I know this is repetitive stuff, right? Like watching price as it hits major moving averages, or watching it take off from major moving averages, or seeing it get rejected at a first attempt to break out, or get support on a pullback on the first attempt. But we show it time and time and time again because it's literal repetition and then learn by doing on your part to get comfortable and trusting enough in what the market's telling you on your chart, so that you get to the point where when you see something, you can instinctively react. Or if you're trying to automate your trading, like when you're looking for price to get back to the 50s so that you can long it, and then, you know, take profit at here, here, and here, or all of it at once, or whatever you decide to do, right? That's where we want to get you. So you feel confident enough that when you see something on the chart, you're going, yeah, that's a setup I like, right? That's my ideal setup. That's the one I look for. And you'll know when you see them, right? Like we talk about, here's a 15-minute chart of that ETHFI monster, right? That it's turning out to be. This is, you know, I'm not in this thing, unfortunately, but, you know, coming out of this consolidation and you catch a good signal and it just continues to run, well then, okay. But we still don't even have a sell signal on it yet. And let's admit it, these are the things that we like about crypto, right?
Yeah.
Right, like, you know, we had to be honest. So is it showing? Okay, so what do we got up here?
POC.
Yeah, we literally kissed the upper value range. We've come back to the point of control. If we don't hold it, because we know the point of control is a shelf, right? So anytime you see that thin red line, even if you can't see the banding on the right-hand side of the chart, but when you see that thin red line, you automatically know that's a shelf. Okay, so the POC will always be a shelf. And what will be above and below that shelf, like again, if you were looking at your chart and you didn't have the banding in view, you would know that the POC level is a shelf, and everything south of it is likely a gap, and above it is likely a gap. You'll understand that the more that you see it over time. This is always going to be a shelf. This on the upside will be gappy. This on the downside will likely be gappy too. Now, what are you waiting for? You're waiting for confirmation here if you're wanting to short, and hopefully you fall into that gap and you can start to, but it won't just drop all the way to the bottom or anything like that. So, and that's where people get frustrated. Most important thing is that you're on the right side of the trade and just let it take care of itself. And of course, the other opportunity or the other possibility is that you double top this thing, right? And then we're having that conversation again. Oh, we've got 2 equal points in price, blah, 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 right? And this could just turn out to be a slight retracement in a further uptrend, and then we look to take out the previous wave's high, as opposed to the failure that would look to take out the previous wave's low. And this is just, you know, kind of rinse, repeat, and it's this repetition that will turn you into a real good technician. Now, just the discipline to, you know, learn by doing, understanding a handful of very simple things, and using the tools that we have that interpret what the market's telling us to determine, do we long, do we short, and it's a safe place to do it. This thing was written with that intent, to create a safe, profitable entry, either long or short. It wasn't designed to pick a top or a bottom. It was designed to pick the safe entry. And when I say the safe entry is, it's the one that didn't fake you out. Okay, so, and we all know what I'm talking about. Everybody can do this. Everybody and anybody can do this. And what you're going to learn is there's a whole bunch of stuff that is not necessary to be effective at this. I want to make sure that when you leave these sessions, there's something that you can take away, even if you've heard it before, that you can actually see works, that you can take away and apply to your trading. You don't have to reinvent the wheel. A handful of very simple things that tell you what the market's doing. And I know from talking to a lot of you that the more you take that kind of mindset, the more successful you've been, the more your success rate goes up, and then the profitability for trade somehow goes up as well. And lo and behold, you lose less money. That's what's important. The pontification about where things are going because someone has an opinion or they've lived in a business for a certain amount of time, although that experience is relevant, it does not necessarily mean that that person understands where price is going based on what the market is telling us. That is a very difficult thing for people to separate at times. So at the end of the day, it is always the market that wins. The market tells us what it's going to do, whether we like it or not. It's just up to us to act on it. And, our job here is to help you get more comfortable acting on what the market's telling you and blocking out all of the stuff that creates indecision. Right, so we will pick this up, I guess, on Thursday of this week. And I think hopefully have a guest for that session as well, and I'll let you know who that is a little bit later. But is there any more questions before we cut off?
No questions for me, Blunt, but like always, we appreciate you.
Well, thank you very much. I love coming in here and doing this thing with you guys. So we will, of course, be drawing from user IDs on BidFi. So if you have not registered for your BidFi account, where you can buy FEG as well, by the way, just either go to my YouTube, which is at Blunhouse TA, and all those links are there in the description. Grab yourself an account, and hopefully you'll be winner of one of the 2 trading bonuses per session. And I think it's a super slick exchange for those of you that aren't on it. I think you'll like it. Little bit of news, I'm putting together a premium Blunhouse group for Telegram, and I'm going to just kind of keep your eyes out for that. And I'll be in there probably twice a day to do live work like this and to work with people one-on-one, so that we can hopefully accelerate your progress. It's great to come in here and we do these things, and I love doing them, but I recognize that it might be in some people's best interest to get some one-on-one time in, and we've kind of come up with a way to do that that's super efficient. So stay tuned on that.
Sounds good.
All right, guys. You know that if you ever need to reach out to me, that you can find me on Twitter and on Telegram and stuff. You guys know where I am, so don't be strangers, and I will see you guys on Thursday.
All right. Take care, Blunt. We'll see you Thursday, buddy.
Take care.